guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and today we're going to be talking about retracement levels and retest. We're going to talk about the difference between, say, a 25% retracement, a 40, 50, 60% retracement, 75, 100% retracement. When's the best time to buy 100% retracement? Why we don't buy 25% retracements? Why 50% is ideal? So we're going to be talking about a lot of those things, and also this is going to talk a little bit about transitions as well, because sometimes we'll see a double bottom 100% retest and failure, and that possibly could be the transition from that stage 1 bottom into an early stage 2 uptrend, and also a stage 3 M top that goes into a stage 4 downtrend. So it's a very important lecture because it's going to help not only take better buy setups, but also allow you to see when stocks might be transitioning and leaving one stage and moving into another stage. And by understanding this, it's going to help keep you on the right side of the market, the proper side of the market. All right. So it's a pretty technical lecture, but it's also a very important lecture, like I said, to help you guys profit and keep you on the right side of the market. Guys, help me out, man. If you like these videos, please hammer that like button, smash, crush that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is retracement levels and retests. I think this is a very important topic because one of the things that is important for traders to understand outside of psychology and money management is where to buy a stock, right? I mean, you think about it, I guess you could argue it's part of the big three, right? Money management's always number one. Then you have psychology, which is very important. And then the other third pillar of this is technicals. And when you think about retracement levels and retests, where a stock is going to turn, where you should buy a stock or not buy a stock are very, very important. Other than just, buy low and sell high. But it's an important aspect. And one of the things, and it's not really a big proponent, I guess, of today's lecture, is quality of retracement. So we're going to talk about retracement levels. We're going to talk a lot less about quality. And the reason I'm commenting is today I saw in the chat room quite a few buy setups mentioned that, honestly, the pullback quality was terrible. Maybe the level or depth was okay, but the quality, the overlap was really bad. And it matters, okay? It matters. So we're not going to talk as much today about that, but it's something you want to give some thought to when you're thinking about taking a buy setup is the quality of the retracement. But today, anyway, we're going to talk about levels as percentages. 40%, 50%, 100%, 75%, 25%. We're going to talk about those different levels of retracements as well as retests. All right? So before we do any of that, though, we have to first do, when will the insanity stop? I mean, we talked about this last week, but in a weird, messed up kind of a way, we don't want the insanity to stop. Because if the insanity stopped, that would probably take a lot of volatility away from the markets and it would be harder for us to make money. So we want people just openly giving us their money, right? That's kind of what we want. Let's kind of hope it stays this way. But this week's, guys, is not nearly as egregious as some of the ones in the past. But at the same time, it's also really bad. I've had this. You can see here the date. I've had this in the vault for over a year. I have so many. When will the insanity stop? I get them all confused. This isn't about money per se. So in some ways, it's not as bad, but in other ways, it's worse. It's way worse. So you're basically saying, hey, me again, feel free to use this email as one of your examples. Well, I am. You happy? I need your help. I need your insights on what to do next from this point forward. And see this, see snip, right? If you could spend at least 1 minute on each stock to see what I should do, I can compensate for you. Guys, this person is already in these positions, okay? And you look here at cash and alternatives, 99% down? I mean, what? What are you doing? Now, the reason I put this up here, because some of you love to see big numbers. Hey, little Johnny lost $2 million, and that really gets you excited. But this actually is a bigger problem. Because this is what pretty much the average person does. Whether you're a trader or an investor. Be honest about it for a second. Just really give it some thought. How many of you out there will hear a tip from somebody, whether it's a mom, a dad, a cousin, a brother, an Uber driver, and you actually like kind of get serious about it. You do. Like your Uber drivers, hey, have you heard about that stock Caterpillar? Oh man, I heard they built this new backhoe that's like the coolest thing ever. And the CEO said that. And you literally go home and you type in Caterpillar. Like, hey man, what's up with Caterpillar? Right? Or somebody mentions to you, hey, have you seen Upwork? This happened to me about a month ago. Jared, I bought some Upwork. I heard they're doing really, really cool stuff. And I'm like, really cool stuff? Yeah, I bought some on a tip from a friend. And I'm up 40%. This is in a real conversation. I'm up 40%. They actually happen to be up about 100%. And what do they think? They actually think they made an intelligent decision. They don't in any way, shape, or form equate it to luck. It's all an intelligent decision. And it's unbelievable. And you just sit there and you're like, that's not a long-term approach to investing or trading stocks, at least not a profitable one. Yeah, every once in a while, you'll hit one. Of course you will, right? I mean, you can throw enough shit at the wall, something will stick. But it's not a good approach. So common sense really is a superpower. So this, to some of you might be like, well, this person, this isn't that egregious. It is, because they're asking a complete stranger, of which they don't know much about other than some videos online, what my opinion of their portfolio is. And what if they took my opinion of their portfolio really seriously? And what if I was just some charlatan shenanigan person, be like, oh yeah, buy more of that. And you do it. Come on, man. Have your own rules in place. This is a serious business, and it really needs to be taken that way. So anytime you put money into anything, whether it's a trade, whether it's an investment, know what you're putting it into. Don't just take your third cousin's advice on it because they said it's good. It happens all the time. I had this happen about 10 years ago with an uncle of mine. He literally was like, Jared, I know you're into trading stuff. Have you ever heard about those computer-based forexes where you put like $1,000 or $5,000 or $10,000 and you just let it go and it just makes money by itself for you? He goes, this guy showed me this algorithm thing, this chart, and where like at the end of the year it makes like 500%. And I just sat there and I'm like, dude, you're like almost 60? And that doesn't like make your spidey senses tingle a little? Your common sense just isn't like tingling right now. And this is a successful person I'm talking about. And I'm like, what? 500% a year, you just set your money in there and just walk away and the Forex computer will just make you tons of money. Gosh, if I had only known. If I had only known, I would have wore that face covering 10 years ago for flu season. If I had only known. Come on. I mean, it's unbelievable. This stuff really does happen. All right? So I went on a little tangent, but it's because today's When Will the Insanity Stop is actually one of the most egregious we've seen. So, without further ado, let's talk about retracement levels, Let's talk about retracement levels. There are various types of retracement levels in terms of depth, right? Some of you will use Fibonacci retracements, which they're okay. I'm not, again, a big fan of indicators, but I think Fibonacci retracements are actually reasonable, okay? But why are retracement levels important? What do we use them for? Well, we use them to measure the strength or weakness of a move, right? The less it retraces, the stronger the move is. The more it retraces, the weaker a move is. But do not equate that with immediately buyable or shortable. Let me repeat it because it's important. I just said the shallower a retracement is, the stronger the move is. That's true. The deeper a retracement is, the weaker the move is. That's true. But nowhere in there did I say, hey, buy shallower retracements, stay away from deep retracements. I don't want you guys equating those two things. They're completely different conversations. So don't put those together. Okay? So they also help us determine if the current trend will continue or likely reverse, hence strength and weakness. So the level of retracement helps us determine that. It also helps us determine the odds of success, right? How high or low it is that it's going to bounce. And if it bounces, how much will it bounce? Because of where it's currently at. Okay, so in short, retracement levels help keep our expectations in check. They help keep us objective. Okay, as a quick example, because we're going to get into this in just a second. 100% retracement, we're not expecting 100% bounce. If you have 100% pullback to major price support, we are not expecting a full 100% retracement back up to major price resistance. It can happen, and it does happen, but that's not the expectation. And that matters because when you get into a trade, you need to know what your expectation is, unlike the person in today's When Will the Insanity segment, happen. So given the prior pivot compared to the current pullback, we can surmise what might likely happen next. Okay? So, as you guys know, not a big fan of indicators. I think Fibonacci's are interesting retracement points, 38.2, 50%, and 62%, 61.8. This is actually a good range. We can call this range 40 to 60, 50 being right in the middle, okay? So we can try to predict support and resistance points in there, and there's a reason, and we'll talk about it here in a minute, why we choose 40 to 60%. I'm going to explain it in the next slide or two, okay? Just understand with all retracement levels, with all indicators, what are we really looking for? We're really looking for multiple concepts, right? We're never just looking for one thing, because one thing in a vacuum really doesn't give us a lot of information. So when you talk about a moving average or a prior pivot or a retracement level or a trend line or a bottoming tail or a change of color bar or a volume spike, all of those things we just talked about, just mentioned, they increase the odds of what you're seeing or what you're hoping that will happen will actually happen. They increase the success rate of your trades because more things are happening in an area. Okay? So don't just look at retracement levels in and of themselves and go, Jared, it's 50%. You told me to buy it. That's not what I'm saying. I'm saying that's one aspect of a bigger picture, whether it's a bottoming tail, whether it's a trend line, whether it's a moving average, okay, whether it's support, et cetera, and so forth. All right? So as we all know, price and volume come first. After confirming a pivot based on price, then you can look at a Fibonacci or a moving average, okay? Always rely on price, okay? So, basic, simple. I'm not going to spend a long time on this slide. These are your basic Fib retracements, okay? And again, I don't talk about Fibonacci very often because I don't use them. But they're just a range. And what we're basically saying here, that within this range between 38 and 62, call it 40 to 60, this is the area we're most interested in taking a buy setup, okay? And I'll explain on the next slide why that is. But this is the area, note area, not the exact penny, not the exact percentage. Oh, it's 52.7. I don't care about 38.2. I don't care about 61.8. I care about the area, okay? The area. It doesn't have to be exact, all right? You're not shooting for a hole in one. You're just trying to get close to the pin. That's it, okay? So why do we care so much about this? What difference does it make to us? Well, let's talk about it for a second, okay? So right here we have a stock that moved up from $18 all the way up to 20. It pulls back to 19 and then bounces, okay? And that's right at the 50% level. So we'll focus on 3 percentage points just to kind of make the analogy complete. We'll focus on 25%, which isn't on here. We'll focus on 50%. We'll focus on 100%. Okay. I think a lot of people get the 100%, and we'll talk about it in just a second. But let's start with the 25%, okay, which is kind of where this bounces. So imagine it's right here. All right. So you have a stock that just moved up and it ripped pretty good, right? From 18 to 20 bucks, and it pulls back 25%, right there where my cursor is, okay? Right in that area. Why is this not an ideal retracement level? See, the immediate thought process from newer traders is a simple one. Well, geez, the shallower the pullback, the stronger the move, the more likely that move continues. And I can understand, like face coverings, why you might think that that's actually true, but it's just not. Okay, it's just not. All right, so 25%, the problem with 25% is it hasn't rested long enough and the risk to reward isn't good enough. So both you, PS and Felix, are spot on the money, right? So when you think about it, I use the analogy of running a marathon. If you just ran 26.2 miles, you're probably going to be a little tired. If somebody says, hey, I'm going to give you 1 day's rest and I need you to run another marathon. Now remember, we're talking about high-level competitive athletes here. You ran a marathon, you get 1 day rest, I need you to go win tomorrow's marathon. They're going to look at you cross-eyed and go, what? I mean, it takes a lot of energy to run 26.2. I can't do it with 1 day's rest. So the point simply is, yes, you just won yesterday's marathon. You're strong. You're a good marathoner. But you need more time. So don't get me wrong, there are plenty of times where a stock pulls back shallow like 10, 20, 30% and then pivots and rips. But those aren't the ones you're interested in buying because you're asking for too much of the stock. You're asking the stock to pivot and bounce and put in another significant move higher after an already significant move. So when you look at 25, say 20 to 30% retracements, they are not ideal retracement levels, and we generally stay away from buying them. We generally stay away from buying them. This is also a similar reason why we don't take 3-bar plays on the 3rd bar up. It's got to be the first and occasionally the 2nd bar, but we really prefer the 1st bar. Why? Because if you're taking a 3-bar play on the 3rd bar up, it's already tired. And a 3-bar play, as we know, is a momentum play, and you don't get much of a pullback on a 3-bar play, right? It's a very narrow, shallow retracement on bar 2. So the concept applies to 3-bar plays as well as pullback buy setups. Okay, it hasn't rested long enough. Give it more time. Be patient. If it pivots at 20% and goes without you, so be it. Oh well. Okay, so we pull back now into the 50% range. 50% range is an ideal retracement. It's an ideal retracement because we're sitting here going, okay, the stock has moved up quite a bit. It's pulled back about halfway. It has rested long enough, just enough to have enough rest, enough power to where it can pivot and go higher. The risk to reward back to your target area is also good. And you're sitting there going, okay, it's not so weak that we question the strength. It's not so strong that we question the amount of resting period. It's just enough. Okay, so 50% is that middle ground area where you're like, you know what? It's shown good strength, but rested long enough. It's not too weak. It's shown enough strength. Okay, so 50%, and again, this is where that 40 to 60 comes in. It's a range. It doesn't have to, I mean, look, it doesn't have to pull back to 19. It could go back to $19.20. That's fine. It could go back to $18.90. That's fine. Give it a range. It's that area. And remember, like I said on the last slide, you also want to see multiple concepts converging in this area. You want to see a moving average here. You want to see support to the left here. You want to see a bottoming tail. You want to see a change in the color. You want to see relative strength. You want to see a volume. You want to see all those things. It just gets better and better and better and better and better. Okay? So retracement levels are part of location items, and location items are really important to our trading. So 50% is that ideal middle ground. Now, why are we so skeptical? Why are we so skeptical of 100% retracements? What's the deal with these things? I mean, you look at 100% retracement and you look to the left and you go, what, there's support. It should bounce. And you're right. It should bounce. It should. And it likely will. The question is, how much will it bounce? Okay? And Ade has it right, or Ade, I apologize, and now you say your name. That's the main focus point here, right? PS, same. Uncertainty, weakness. The question becomes, if this uptrend, if this stock is so strong and we're in an uptrend, why is nobody buying it? It makes you question the strength of the stock. Like genuinely question. You're like, well, gosh, it moved from 18 to 20. That's good. It's bullish. It's pulling back. It needs a break. We're good with that. Hey, I need you to take a little bit of a rest. That's cool. But when somebody doesn't show up for work after 2 weeks, you're like, well, maybe they quit. Maybe they don't like it here. Okay, so when the stock continues to go lower, you're asking yourself on the way down, where are the buyers? Why haven't they stepped up? And to use like a retail or a clothing analogy, you know, you sell something at a discount to increase sales. And you're like, well, we took 50% off the price. No one's buying it. 60%. No one's buying it. 70%. No one's buying 80%. Why the heck is no one buying this pair of jeans at 80% off? Because nobody likes them, apparently, right? They're not that popular. And you're going to have to keep discounting them and discounting them and discounting them until somebody finally steps up and says, I'll buy them. That's cheap enough that I can't lose, right? And we've all seen that in life, where you purchase something that you don't really want, but you look at it and go, it's just so damn cheap, I can't not buy it, right? And that's the same thing with stocks. You're sitting there and people are going, well, I don't like it enough to buy it at 60% off. I don't like it enough to buy it at 70 or 80%. Oh, at 90%, I can't go wrong. I can't lose on it. So I'll take a shot. But if they're using that mentality, that attitude, I'll take a shot. Where's the conviction? Where's the commitment? I'll take a shot is not conviction, right? It's not. So when you look at this, you're like, man, there's not a lot of interest in this stock. It needed to pull back 100% before buyers were willing to step up and thought the stock was a good enough deal to buy it? That's not good. Okay? That's not good. So when it bounces, we also expect the bounce to be shallow, right? And in this case, about 50%. See, when you pull back 50% and bounce, we expect to break the prior high. We expect to break the prior high. But when you pull back 100%, we are not expecting to break the higher high. We're not expecting. It happens sometimes, but that's not the expectation. So not only is it 100% retracement, the expectation for your return on investment's lower because we don't expect it to break the prior pivot high. So when you look at retracements, 25 is a little too shallow, hasn't rested long enough. 50 is just right, okay, in the middle, and 100% makes you question the strength of the stock. Okay, and I know I spent a long time on that slide, but you really have to internalize that when you're looking at stocks because you can get caught up in the emotion at the moment. Why a lot of things sell for higher prices at auction. You get caught up in the emotion. And some people will buy something super cheap at auction just because it's super cheap. It's not even a car they wanted. So you need to understand where you're at on this, okay? You need to understand where you're at, okay? You shouldn't be asking about 75%. Right? That's just, it means you didn't pay attention to anything I just talked about. Right? It means you just didn't listen to anything I just talked about. Obviously, as you get closer to the 100%, what happens? Less and less commitment from the buyers. The further down you go, the less commitment there is. All right? So, we're going to take a look at a few things. Okay? Retracements and expectations. So when you take a look at this, right? Fairly sloppy chart. But when you look at the chart and you start on the left, a lot of choppiness here. And then you get this huge pullback. Now note, bottoming tail here, bottoming tail here. That's your 100% retracement point, like 44, 44, 50. So when this stock pulls all the way back, it not only pulls back 100%, it pulls back like 130%, 140%, something significant, okay? Now, we do have bottoming tails, which means it's probably going to bounce. But notice, when it bounces, where does it bounce? About 50%, and then it fails, right? It bounces about 50 and then fails. So when you see this failure, this is not a surprise because we knew over here there's 130% retracement. This stock's not that strong. It took that long for buyers to finally go, oh, that's a good discount. I think I'll buy some. And then it pulls back and goes, doesn't even retest. It goes below the other low again. And then this time when it bounces, buyers step up a little more significantly and put in a higher high. Would I expect that? No. This is an expectation that's a surprise to me. I would expect after this lower low, another 50 to 100% possible retracement, right? The prior pivot would be the maximum I would expect from this. I would expect more of a pivot into the 44, 45 area and then a little lower. But I want you to take note how things are developing here and changing. So it does put in a higher high, unexpectedly puts in a higher high. And now because of the higher high, we have to surmise that buyers are a little stronger than we originally thought. So when it pulls back, it doesn't retest the low. It does about a 60% retracement, maybe 70. Leaves some bottoming tails, bounces, pulls back, and bounces. So again, this is an example of a stock you wouldn't likely buy. You're not going to buy it here, right? It's just for example purposes. You're not going to buy it here, okay? When it finally bounces back up, you can see it takes out this pivot, and it takes out this pivot. So now the bulls are starting to step, but they still have the $49 area, okay? So there's still an issue right here, but now things are changing. We went from all the way over here, super weak, 120, 130% retracement to over here, we've retested the prior high at 49 plus. And note when we pull back with a bottoming tail, with a change of color bar, above the newly rising moving average, and about a 50% return. Take the top of the pivot at 49 and the bottom of the pivot somewhere around 43.75 to 44.50, right in that area, okay? And you're pulling back about 40, 50%. this becomes much more buyable. You'd get in at like 47.50 with a stop at 46.50, but your target's 49. Why is the target 49? The target's 49 because it's a double top. You're not expecting to overcome this double top. Now, in this case, the stock gapped up, did not give you an opportunity to get in it, okay? So this is just an example chart, all right, in terms of how you should take a look at a chart and see what to expect. Would you randomly buy at 49? No, there's no pattern there. Why would you randomly buy at 49? There's no pattern here. Where are you going to put the stop? At 48? You're going to put it at 46? There's nothing here. What you want to do in this scenario, guys, is be patient. Let the stock go up to 51, 52, 53, and do what? Buy the pullback to 49. And if it doesn't pull back to 49, then you move on to the next stock. You do not buy this at $49. You let it bounce higher, prove the strength, let it significantly break above the double top, 52, 53, 54, and let it pull back to 49, then you buy the pullback. October 2nd, 3rd PTS is going to be awesome. I have a big section on this particular topic. All right, so 100% retracements that happen after an M top have a much higher chance of continuing in the direction of the retracement. Okay, so think about that. If you have an M top or a W bottom, there's a much higher chance of continuing in the direction of the retracement. Why? Because it's been retested. It's been tested. You see, a V top or V bottom has a much higher likelihood of reversing. So what that means is, okay, and you'll see an example in a second. What that means is if a stock is ripping higher and it puts in a V top, the retracement is subject to a much bigger potential pullback because there's no prior area to use as support or resistance. But when you put an M top in, it bounces, pulls back, and retests, there's a much higher chance that that will continue going lower because it already proved to you there are sellers to the left, right? That's what the first pivot did. Sellers came in. So the second time it tests that area, you're much more confident sellers are going to come in the second time. Okay, but the first time on a V top or a V bottom, you're not as nearly as confident, okay? 100% retracements are less likely to set new highs and lows on the initial move. That's what we just talked about on the last slide, all right? So when it gets the initial bounce, you're not expecting it to retest the prior high. You're expecting roughly a 50% bounce, a 50% retracement. So if you're buying a double bottom retest, make sure that your expectation is the prior pivot high at 50%, not 100%. Right? You're not likely going to get 100% retracement on the initial move. It might chop around for a while and then eventually go higher, but the initial move is not going to be 100% retracement. Every retracement creates void, but is the void tradable? That is a question for a different lecture, okay? So this is what I mean. So if we're in an uptrend, higher high, higher low, higher high, higher low, higher high, and we get a pullback, well, in that prior pivot to the left, right, we have level 2 price support, minor price support, lower high, lower high, lower high, bottoming tail, change of color bar, 50% retracement. Probably above the trend line, probably above the moving average. This is a great spot to buy a stock. But if this continued to go down and down and down and down to 100%, guess what? Now we have to be concerned when we get to the 50% level why buyers are likely not going to step up is because of the 100% pullback. They're not as strong, right? They went to battle and they lost. If they were as strong as we thought, they would have pivoted the 50% level, but they didn't. And because they didn't, we have to question their strength. All right? So I mean, if you think about it in sports analogies or military analogies, it's kind of like saying, hey, if you're supposed to be a strong team, but you lose to the last place team in the league, you're not as good as people thought you were. So why should they bet money on you winning the next game? Seriously, you just lost to the last place team in the league, and you're supposed to be really good. Why would I lay money on you on the next game? The only way you're going to lay money on that team is what? If the odds are so incredible that it's worth it for you to do so. Right? That's the only way you would do it. You're like, I'm going to get 10 to 1. I'll lay 10 to 1 that they win that game. But if you want to give me, 2 to 1, no, I'm not going to do that. right? So the point simply is you're questioning the strength if it pulls back deeper, okay? So when you look at a perfect scenario, this is it. Stock gaps up, pulls back, stays above the moving average, moves higher, puts in a new high, consolidates, moves higher, puts in a new high, consolidates, moves higher, puts in a notice. It's staying above the moving average the entire time, okay? Notice right here, when it moves up, it gets far away from the moving average. Remember the concept. 3 bars up, think sell. 4 bars up, really think sell. 5 bars up, really, really think sell. We're at 4 bars up, think sell. We're also far from the moving average, aren't we? So this stock is 4 bars up. It pulls back to price support, minor price support, level 2 price support, whatever you want to call it. Rising moving average. This is ideal. This is perfect. This is exactly what you want. 37.50 entry, 37.40 stop, boom. First target area is going to be somewhere in that 37.70, 37.80, 2 to 3 to 1. Continues higher up to above, what, 38.10-ish, 60 cents. I mean, this is a perfect move, okay? Perfect move. These are the kind of buy setups you should be waiting for. Do these happen? Well, they do happen every day. We just have to find them, right? We need the patience and discipline to wait for this. Okay. Now, we're going to switch gears here. This is ideal, and we fully expect a higher high to be put in. We expect it because we're in an uptrend on a 50% retracement. But what about this? What's our expectation now? Now, we're in a stock that was in an uptrend. We can see it by the moving average. It consolidated out, and honestly, let's be fair here. This looked higher. Over here to the left, it did. Consolidating. Remember, we have 2 types of corrections, a correction through price, a correction through time. Well, this is a time correction. I would have honestly thought, hey, we corrected back towards the moving average. We should bounce. You didn't. You broke below support, went below the moving average, pulled back, bottoming tail bounce, retest bottoming tail bounce, roughly. Right? That retracement is about the same as the prior pivot. Puts in a higher low, lower high, and then rolls over. We're in a little bit of a conundrum here, right? So we're in a stock that was in an uptrend and is now in a downtrend, but are we in a downtrend? Meaning, how do we know we're not potentially transitioning? Right, we could be in a stage 2 uptrend, then into a stage 4 downtrend, right, with the flat top, stage 3, and then the double bottom retest. Bounces, higher low, lower high, 100% retracement. So we look at this, and I'm focused mainly on the right-hand side here. What's the expectation, guys? Talk to me. What do you see happening for this stock right here? What would you think is the next logical move for this stock? Talk to me. What do you guys think? 50% bounce, down, back to the moving average, to the moon. YOLO diamond hands. Possible bounce, bounce and fail. How it got there, powerful red bars equals lower. Interesting, Klaus. Going down 50%. I want to focus on Klaus's for a second, and probably not for the reason he thinks. Okay, so this puts us in a pickle because we don't know what the future is going to hold. We can only surmise from the past. And if we look here, we have a bottoming tail and a bottoming tail, double bottom retest. Okay, that's positive. It is. That's a positive thing because it's a higher low technically. Bottoming tail, and you're thinking, okay, you could argue it put in a slightly higher high and then a higher low, but then you're like, but it put in a higher low, but then it put in 1, 2, 3, 4, 5, 6 red bars. You could say it's weak because it put in a higher low and a lower high and then 6 red bars. Or you could say it put in 6 red bars, 2 of which were pretty wide range bars, some of the widest bars on the entire chart. This last red bar might be the widest range on the whole chart. Has what I would consider to be what type of volume right here, guys? What type of volume would you consider right here on this wide bar? I would consider that to be ending volume because it's on the 5th bar down. 1, 2, 3, 4, wide range bar, ending volume where at? Location, location, location. Double bottom support. So I think in the short term, the expectation is a shallow bounce. So those of you who said 50% bounce, those of you who said bounce to the moving average, that's my expectation. That's what I would expect this stock to do, because you are extended into double bottom support. And how you got there was after 6 bars, wide range bars, ending volume, right? But to expect this stock to break 3150 is a very lofty expectation. That's not an expectation that you really want to have. So if you choose to take this, you're saying to yourself, gosh, if I put my stop loss under $29, it should hold. Why? It's tested there not once, but 2 times, and both times it came in the vicinity of 29, it bounced. And this time, the third time, it's arriving there after a pretty extended move on volume. It should bounce. It should. The question is how much? Nobody knows. But the expectation is a bounce, and I would think somewhere in the 50%. So then the next question becomes, tradable bounce? Maybe. Depends on market conditions, right? Depends on how aggressive you want to be. Depends on your management strategy. Example, you get in at 29.50 with a stop at 29, you might have 2 to 1 in this at 30.50. But if you have 3 to 1, say you're doing 3R all or nothing, I don't think you can take this. If you're going to try to scalp it for a 1R pop to 30, probably a decent idea. If the market looks like it's about to rip higher as this is happening, probably a decent idea. So it comes back to what your expectation is for the stock and how does that expectation align with your trading plan, right? So keep that in mind. Wow, I spent a long time on these last couple slides, didn't I? All right, now, this one isn't from that long ago. All right, well, it is a little bit, a few months. All right, big gap up on LUV, pulls back, fails the buy setup, pulls back, gets really choppy, retests, bounces, pulls back, goes. Why is the second buy setup better than the retest? Why? Talk to me. There should be multiple reasons. Why is the second buy setup, this is this one over here, this one right there on my cursors, why is this better than this one over here? Lower low on the retest, good. Higher low on the buy setup, good. I like it. See, you guys are paying attention. This is encouraging. All right? So absolutely, everything all you guys said is true. In fact, I don't think I've seen a bad answer, which is rare. All right? So stop answering before somebody says something foolish. All right? So on a serious note, though, it gaps up, pulls all the way back. This is a support area. You could say, you know what? The stock might bounce here. Now, is this the type of buy setup that you make a habit of trading? No. Unequivocally, no. And unfortunately, these are very commonly talked about in the chat room. Almost every day, a stock gaps up, rolls over to support, deeply rolls over. I mean, this thing went from 28.50 to 27. That's a pretty big pullback. And somebody goes, Jared, what do you think of the buy setup on LUV? And I'm like, it's garbage. It's garbage. Look how weak this. Yeah, but look at the pullback. But look how weak it is. But look at the pullback. Look how weak it is. I'm going to go with the weakness. Let it prove itself to me. If it's so good, LUV will bounce back to 28, pull back to 27.50, and then I'll buy it. But I'm not going to be the first one getting off the boat on Normandy. All right? Sorry for the analogy, but it's true. I don't want to be the first person off the boat. All right? That's a tough place to be. Okay? You don't want to be the first person in here. Now, if you bought it at 27 and put a stop at like 26, maybe. It's tough. A dollar stop's tough. Bounces, retest, but puts in a lower low on the retest. In fact, it had a failed retest over here. Why is the second buy setup respectable, decent, okay? Because it puts in a higher high and a higher low. And the pullback was smooth, sequential, and left multiple, not one, but 2 bottoming tails above the moving average. So the pullback got overlappy and sloppy. The good news here, if there is any, it's that you can see what for the first time? You can see the tug of war happening. Notice when the stock opened, it was just bearish, 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 bearish. But finally, buyers are stepping up here. Buyers are stepping up here. Buyers are stepping up. Yes, are sellers also stepping up? Yes. But for the first time, you're actually seeing a little tug of war. The buyers have stopped the bleeding, so to speak. Right? When the stock opened up, it was just pure selling pressure. The buyers have finally stopped. So that's a positive sign, but I still don't want to be the first person in it. Let those people mess around with that shenanigan crap. Finally puts in a higher high and a higher low. Possibly ready to buy it right here. Okay? Dare you say it, Jordan? I'd say that, but it might, might get kicked off YouTube. Anyway, right? Higher low, 50% retracement. Higher high, multiple bottoming tails. Decent area to buy. Great area? No, but decent area. Stocks probably transitioning. Okay? What about this? What about this? Gap up, rips. Goes from 40.70 all the way up to 42 plus. Red engulfing bar, pulls back, bounces, good or bad buy setup. Now, what I should have done is not shown you the future. Because many of you new people would be like, oh, it's a terrible buy setup. Why? It didn't work. That's why, Jared. Is this a good buy setup or a bad buy setup? What do you guys think? Good, good. I like it. I would have taken it. Yes, bad. Shallow retracement, bad. That one's good. Shallow, good, good. Off the open, good. Wow. I am disappointed with you guys. This is, to me, is not a buy setup that I would take. Why? Well, remember, top to bottom. Okay, so we're at 42, I don't know, 10, 42, 20, whatever that is. Okay, down here at 40.70. All right, so that's, I don't know, $1.70 on the move up. Okay, and it pulls back about 70 cents. But take a look at the pullback. One, take a look at the move up, right? Big, wide range bars. Big move means we probably need a little bit of extra resting time because it's such a big move on such wide range bars. And then you get an engulfing bar. Where is the sequential pullback with light or little overlap? We want 50% or less overlap. What do we have here? We have about an 80% overlap on this bar with a relatively shallow retracement, right? It might be in that 30 to 40% range. So for me, this is not a buy setup that I would want to take. Okay, overlapping bar, engulfing bar, never a good thing. Okay, and then the shallowness of the retracement, not something that I would want to take. Do these work sometimes? Sure they do. But also keep in mind one other thing. What's one more thing you might want to keep in mind? No, I don't think anyone's mentioned it. I don't think so. What's one more thing you might want to consider here? You might. I don't know exactly because I can't see it, but might consider. Angular retracement's a good one, right? But that's not what I'm thinking. It's another thing you might want to consider here. We always consider the higher time frame. Nothing? That's it? Nothing? Come on, man. Thank you, PS. Thank you. Trading range. I don't know. This is what I'm saying. I don't know. I'm just looking to the left. This, to me, looks like a stock that rarely puts in a $1.70 move. Right? To me, again, I don't know. I'm surmising. Okay? To me, it looks like the average trading range on this stock is not $1.70 a day. I don't know. I'd have to check. But with that kind of a move up, and you likely exceeded your average trading range, you want to buy a shallow pullback with an overlapping engulfing bar? I'll pass. I'm good. What happens is you get caught up in the strength sometimes, right? Get caught up in the strength. All right. Wow. This one should be a no-brainer. So, Buyable buy setup, but not necessarily easy. Why? Well, you could make the argument, and this is, guys, and this is where we talk a lot about the difference between a buy setup and a buyable buy setup, right? By textbook definition, we can't really argue that it's a buy setup, right? It's in an uptrend. It's got 2 or more higher highs and higher lows. It's got 2 or more lower highs and lower lows with regard to the bars, right? So we have pivot higher highs and higher lows. We're above the moving average. It's got a lower high and a lower high and a lower low and a lower low. I mean, by textbook definition. The question is it good? Right? So there's lots of buy setups out there, but are they any good? This is why we have pattern boosters, right? So right here, you'd be looking at an entry somewhere around, I don't know, 42, maybe a little more than 42, with a stop loss around 41-ish, dollar stop. So you have 2 or 3 to 1 risk to reward, but look at the pullback. I mean, you're looking at a pivot high of 45 and a pivot low at 35, give or take. It might even be 34. Might even be 34, okay? So you're sitting there and you're like, $10. The middle ground's about 40, but this one pulled back to like 41 and the entry's like 42. It's tough. Moving average is far away, right? Interestingly enough, and you guys might think, that's odd, Jared. I actually much, much more prefer this first buy setup. Lower high with a bottoming tail. Is this the world's cleanest buy setup? No, but the location to the left matters a lot. So is this how I would draw up a good buy setup right here in the 36, 37 area? No. But where it's happening is tremendous. With that incredible bottoming tail, right? You're going to find out in professional trading strategies the most reliable spot on a chart to buy a trade. You're going to find out. So this one to me is one I probably wouldn't take, right? Now, in this market, maybe you take it because everything just goes up. Stonks always go higher. No, but you get what I'm saying. You might actually take this because everything goes higher. But for me, it has the sequential pullback. It's about a 40% retracement. The risk reward, okay, but I don't think I would take it. I don't think I would take it. All right. Now, what about this? Good or bad buy setup? What do you guys think? Good or bad buy setup on Tesla? Take a look at it. Give it some thought. Again, I should probably hide the future. Bad, good, nope, good. Okay, a little bit of a mixed bag. Good, bad one. See, this is, I think, a good slide because it shows real world trading, right? Not every stock or every trade is going to be this, right? I mean, this is what we would love to see on every trade, but this isn't the reality of what we do every day, okay? This one on Tesla, well, there's definitely some things to consider here. So Tesla gaps down, all right? Breaks below support here to the left, like 592 or something like that, okay? Goes lower, bounces, goes lower, bounces, and then does what? It starts to put in a higher low, right? Starts to put in a higher low. So if you were drawing a trend line here, you'd probably draw that trend line right through here, right? So you're breaking above the trend line, putting in a higher low. Now, is this a buyable event? Heck no, right here, right at 11:30, it's not a buyable event. But you have to sit there and think to yourself, man, it put in a higher low. Then it put in a higher high, not once, but twice. It broke this pivot, put in a higher high. It broke this pivot, put in a higher high, and did about an 80 to 90% retracement back to the high. The high is 595. It went to like 594, 593. Very interesting, isn't it? Because again, you broke 2 prior pivots that were bearish pivots, and you broke them, went higher. That's bullish. You put in a higher low. That's bullish. The retracement here is about 50%. Take the pivot high here where my cursor is. Take the pivot lows over here. It's about 50, might be slightly more 60. Not the cleanest pullback in the world when it started. It got a little cleaner in here, right? That's a tough one. What might lead you to take this? What might lead you to take it? Anything? Nothing? What might help convince you to take it? The market. What if Tesla shows massive relative strength? Like on this move up right here, the market was pulling back. And then this thing pulls back, okay? Maybe it's a little below support. I would call that support kind of right here, right? And what if Tesla was showing tremendous strength? And then the market looked like it might actually bounce after Tesla showed strength. That might convince you to take it. But otherwise, it's a challenging buy setup. It's not the world's worst buy setup, but it's certainly not the world's best buy setup either. But conditions, external to Tesla might say, you know what? I might take this. You look at it on a 15-minute chart. Maybe you get more information. Go, this isn't bad. Having the moving average above you is not a good thing. Not putting in a higher high here is not a good thing. But man, it certainly looks like a stock that's transitioning. But we also don't have to be the first people in it either. Okay? All right. Man, I'm spending a long time on these slides today, huh? This is a trade that Unwall and I both took a while back. Okay, as you can see, one of my faves here, Unwall hit target, blah, 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 blah. Stock gaps up. You can see it on the daily chart on the right-hand side, right? Needs to kind of be over that dotted line, give or take, which is somewhere around 66, somewhere around there. So it gaps up to 66, bounces up to 68, pulls back, bounces, retests, and rips. Okay? Entry 66.30, stop 66. All right, Unwall got in a little early because your actual entry should probably be closer to 66.50, right? It should be closer to 66.50, but he snuck in a little early with a bit of a wider stop, right? Gave it a little more room under that area, okay? But why didn't we take the first pullback? Why did we wait for the retest? Anybody? You can see his timestamp on this, right? 9:57. The first pullback was like 9:50. Timestamps long after that, right? Ooh, good. Look at you guys. Extra confirmation, level 2 gap, need a little more confirmation, deep retracement. Ooh, on point. I am surprised nobody said, well, just because he missed it. No, I'm kidding. That could actually be an answer, right? I mean, you could certainly have a justification to take the first trade. Is it as good as the second trade? No, for everything you guys said. We want a little more confirmation. The retracement level here was pretty deep, right? I mean, you're looking at, I don't know, 80%, somewhere around there. Big retracement from 68 down to almost 66. And the low of the day is like 66.80. That's a pretty big retracement. Bounces back up, retests, and it's like, all right, I like the fact that it retested and buyers came back up. Now, does this preclude you, or does this mean there's no way you could have taken the first buy? No, you could have taken the first buy setup. There are reasons to take it, but there's also a handful of reasons not to take it. And then you got to ask yourself in your trading plan, well, are there too many reasons not to take it? Should I just hold back? And remember, our job as traders is to find reasons not to take trades, not to find reasons to take trades, right? It's always easy to find a reason to take a trade. Find a reason not to take it, it's a bit harder, all right? So in this case, the extra confirmation because of the quality of the gap and because of the retracement level. Do you know what I mean? So do you calculate the pre-market in the retracement calculation? No, I do not, Dean. Okay? So in this case, you waited for extra confirmation, all right? No, we're not going to talk about that. Not going to talk about that. I want to talk about this. All right. We saw this chart a while ago. I want to say I brought this chart up about a year ago. Okay. I think I brought it up about a year ago. Okay. So big gap up, bounces, pulls back, bounces, pulls back, bounces, pulls back. Okay. So this is a down trend line. Now note, the stock gapped up. All right. Does it matter, David? Honestly, for your educational purpose, does it really matter? No, not really. Right? Charts are evergreen, period. So anyway, gaps up, bounces, leaves a bottoming tail. Okay. Pulls back, bounces. Now, think about that green bar there. Sorry, the green line. My apologies. This is an area that you would expect some buyers to step up. Why? Well, because they stepped up before. That's where the stock opens, the opening price. You can see the daybreak line. Okay? So when it came back 100% to this area right there, you would expect some type of buyers step up, some type of reaction. So it breaks support with significant new lows, and that's a sign of weakness, right? So buyers finally step up with a big old bottoming tail. First question, you buying this down here? Right here. Where are my cursors? Big bottoming tail. You buying this? I'll give you a hint. It's a 2-letter answer, not a 3-letter answer. I know that's a tough hint. It's a challenging one. It's a 2-letter answer. Okay. Except unless you're a millennial and you say, yeah. Okay. Who said, was it Trump you said? Yeah. All right. Anyway, you're not buying this. Okay. You're not buying this. It just pulled back 130, 40, 50%. Just got a nice bottoming tail. So what happens here? It bounces a little bit. And where does it stop? Oh, I don't know. About a 40% pop, right? Bounces about 40% and then rolls over. This is exactly, and this is why this chart is on here, because this did exactly what you would expect this thing to do. Exactly what you would expect it to do. Bounce shallow and fail. Now, guys, I probably mention this in the chat room every day, every other day. When somebody asks me about a pullback and I say, don't buy it, the most likely thing that's going to happen is it's going to have a shallow bounce and it's going to fail. It's these types of situations that I'm talking about. And there's a lot of people, but look at the size of the bottoming tail. It's so extended to the downside, it has to bounce. Well, it did. And if you're shooting for 1R, maybe you could get away with it. I don't know. But if you're trying to get a 2-to-1, 3-to-1 return, I wouldn't take this. And you have a wide stop because of the bottoming tail, right? You have a wide stop because of the bottoming tail. So your risk to reward is just, it's terrible. Because you're not expecting more than a 50% bounce, and a 50% bounce would be actually pretty good. But this doesn't even put in a double bottom. We're expecting a 50% bounce on a double bottom 100% retracement. So what are we expecting on 130% retracement? Even worse. Let me repeat it because you missed most of that. We're expecting a 50% retracement on a double bottom 100%. What are we expecting on 130% pullback? Even worse of a bounce. Continues lower, bounces, continues lower. This stock is potentially shortable. Then that begs the next question. Would we short the stock here? Where my cursor is right here. Right there. Would we short the stock? What do you guys think? Yes or no? I do, Rachel. It's a little bit later today. It's about an hour from now. What do you guys think? Yup, yes, yes, need more confirmation. Yes, we have all the confirmations right there. No, yes, tough, maybe depends. Yes, yes, yes. My business plan says yes. Wow. I don't know that I would short that. I'm not sure. It would depend on a lot of things. It would depend on the higher time frame, right? What's the daily like? Is the daily really extended? Or is the daily not extended? Is the market strong or is the market weak? I can't say with the information I have right here that I would just say, yes, I would short this. You're not, I mean, you could argue you're in the beginning of a micro downtrend, right? You could argue, I mean, no, actually you really can't. You technically only have one lower low. This is not a lower low. It's a higher low. It's a gap up. This is not a lower low. It's not. It's one lower low. It's not two. It's one lower low, not two. You have one lower high, not two. So when you say your business plan says yes, I mean, you're really technically shorting a stock that's technically not in a downtrend. Right? You need 2 or more lower highs and lower lows. It's tough. It's tough. To me, I can tell you what I would have expected from this stock. My actual expectation and what actually happened are 2 different things in this case. If you had showed me this, I would have told you guys this will probably pull back about 30%, right where my cursor is, and chop around and do nothing for the rest of the day. That's what I would have told you, because I would have said to you, this bottoming tail probably set the low for the day, and it would have pulled back in this range and just chopped around sloppy. That's likely what I would have told you happened here. And I would have been wrong. The stock just kept going lower and lower and lower. Now, down here, you have a little bit of a better chance. Depending on what's to the left, we don't know, but a little bit of a better short, right? Now you have multiple lower highs and lower lows. Now, what would have been another reason to short it? What if it was a mega gap? If this was a mega gap, 20%, then yeah, this becomes much more shortable, right? Right here. This sell setup earlier right there becomes much more shortable. But if it's not a mega gap, I don't know that we can short that. Puts us in a bit of a conundrum, right? Puts us in a bit of a conundrum. Okay? All right, we'll skip that one. All right. I hope you guys learned a little bit about retracement levels. I was not expecting this to go quite this long, honestly. I took a long time on these slides, and I skipped 4 or 5 slides because I was going so long. So as you guys can see, retracement levels are really, really important to your trading, and they're not always so obvious. There are a lot of times where we're caught in the middle, right? Because you see a retracement that's bigger than you want, but then there's other attributes that kind of twist your arm and say, yeah, but it's not as weak as it suggests. Oh, it's not as strong as it suggests. And it kind of puts you in the middle. So when in doubt, stay out is always a good attitude, because what you can do is take a picture of that chart and then evaluate it at the end of the day and go, should I have taken that? But when in doubt, stay out is generally a good attitude. But as you can see, retracement levels, retests, those types of things are really, really important to understanding when a stock might pivot, or if it does pivot, how much it should go, meaning what your expectation should be for it. All right, I'm Jared Wesley of Live Traders. We'll get back at it again next week.